Now we have an update on how the markets are responding to the COVID-19 impact. Now with panic buying on Main Street and fear-driven sell-offs on the Wall Street, the US Federal Reserve cut interest rates for the second time in less than 2 weeks to help shore up the United States economy amidst the rapidly escalating global coronavirus pandemic. Now, for the second time since the financial crisis of 2008, the Fed cut rates at an emergency meeting, aiming for a target range of 0% to 0.25%, down 1 percentage point from a range of 1% to 1.25%. Now, it is being hailed as a bold and emergency action to support the economy during the coronavirus pandemic in the United States. I have on the phone line with me my colleague Arun Sundaram. Good morning, Arun, and thank you for joining us on this broadcast. Can you do tell us about how it's going to impact the common lives there in the United States and all over the world as well?
Good morning, Amrita. We start Monday on a very sour note. This unexpected move on the part of the US Fed, which is the American equivalent of the Reserve Bank of India, has already created a bit of a flutter as far as global equity markets are concerned. Let me run you through how this whole process works. Typically, when US Fed cuts rates, that means to say the interest rate that the US Fed pays on, say, government bonds, etc., will come down. Now, this would have been in the ordinary course of things good news for equity markets, because if you are an investor, you will see lower returns now coming on government bonds, and you will look at probably investing outside the US in other markets which are called as emerging markets like India, Russia, and then South Africa, etc., etc. Now, this would have been a good piece of good news. But this time around, if the US Fed is cutting interest rates, and this is, remember, the second such instance that it has done, because it had done a similar exercise some time ago when there was a conference call between the finance ministers of the G7 nations. Now they are trying to pump in $700 billion into the economy. This time around, the situation is a little bit different, because there is a sense of worry that, look, the world's largest economy, that is the US, itself is facing difficult times. I mean, so where do people like you and me go? I mean, where does the rest of the world go? And that perhaps explains the reason why, as we speak, everywhere in Asia particularly, where stock equity markets have opened, there is a sea of red. The SGX Nifty, which is usually the sentiment indicator as far as markets in India are concerned, that is down about 365 points as I speak. The Taiwanese market is down about 145 points. The Straits Times is down about 70 odd points. So clearly there is a sense of fear, because this is a really unknown territory. I mean, nobody knows how long this problem of coronavirus will last, what will be the impact. Already we've talked about this so many times, that supplies of critical components and goods and services emanating from China will get impacted, etc. So the question is, how long will this pain last? Nobody has an answer. I mean, not even perhaps the most powerful man on the planet has an answer as to how long the impact of the coronavirus is. That is one thing. The second thing is the other impact relating to the health of people. See, look at countries like Italy, for instance. You're seeing so many fatalities taking place. It's a clear indication the economy is going down, physical health of citizens is going down. It is complete mayhem, Amrita.
So, Arun, what can be the repercussions of this decision going forward, like in the future, even after the COVID-19 scare subsides? What might be the repercussions of this decision?
No, first of all, you need to know when it is going to end. I mean, you don't have a clue to it. It seems it is raining incessantly. I mean, you don't have any clue when the dark clouds will disappear and when the rains will stop. So the question of how long the impact will, nobody has an answer. I mean, economists are already saying that the global economy will see a slowdown. In fact, some time ago, UNCTAD came out with a report which said $2 trillion. I mean, 2 trillion is nearly two-thirds of India's GDP. That will be the kind of loss that the global economy will suffer, etc. So everyone is talking. I mean, it's more like, it's like trying to draw in a bowl of water. You can't, I mean, it's humanly impossible. I mean, this is unprecedented. I mean, after 2008, when the Lehman Brothers crash took place, that was man-made. But this one, I mean, we have no
Yes.
clue on whether it is man-made, how did it originate. There's so many things, and the health of the people. There are
Right.
so many countries where fatalities are on the rise. You're talking of 1 lakh plus people being infected. I mean, there is very, very difficult this
Yes.
thing in terms of how exactly this will get, see an end and something nice will happen as far as mankind is concerned, Amrita.